This problem is a very short problem. The only reason I've taken up this problem is because of that the calculation of stock reserve on opening stock. The firm Vishal has two departments. They've given all the details. They've also told us that the tailoring department gets all its requirements of cloth from the cloth department at the usual selling price. So that's something we need to be careful about. So in the books of Vishal, uh, departmental trading and profit and loss account for the year ended 31st March 2019. So we have cloth and tailoring. Cloth and tailoring. Uh, we also need the general profit and loss account for the year ended 31st March 2019. There's no need of a balance sheet because we don't have anything that goes in the balance sheet. So we start with the opening stock. To opening stock. Uh, Stock on 1st April 2018, 5,40,000 and 72,000. Then we have purchases, two purchases, 30 lakh 60,000 and 45,000. Then we have interdepartmental transfers, two interdepart transfers. Now let's see who's transferring to whom. A transfer of cloth to tailoring department. So cloth is transferring to tailoring department. So for tailoring department, it is like purchases. So it will be 4,50,000 here. And this side we will have in the cloth department. I've left one line for sale. By interdepartmental transfers. In the cloth column, 4,50,000 because cloth is transferring to uh, tailoring. Then we also have buy sales. The sales are 36 lakhs and 7 lakhs 20,000. And finally, we have the closing stock. Buy closing stock 9 lakhs and 1 lakh 35,000. This side we also have manufacturing expenses. Two manufacturing expenses only for the tailoring department, nothing for the cloth department. So here we have 1 lakh 8,000. I think that's it for the trading account. There's nothing else that goes. Uh, so I'll move to the items of the profit and loss. So here we have two. We have some selling expenses. Two selling expenses. Selling expenses are 45,000 and 18,000. This is the only item that comes in the profit and loss. Okay. So I directly now move to the, I'll do these calculations and then move to that final part of the stock reserve. So to calculate the gross profit, if we total this, both have a gross profit. Uh, this side the total is 49 lakhs 50,000 and here it is 8 lakhs 55,000. 49 lakhs 50,000 and 8 lakhs 55,000. So two gross profit carried down. For the cloth department, the gross profit is 13 lakhs 50,000, and for the tailoring department, it is 1 lakh 80,000. Bring down the gross profit by gross profit brought down. Here it would be 13 lakhs 50,000 and 1 lakh 80,000. If we total this, will get our net profit 13 lakhs 50,000, 1 lakh 80,000, 13 lakhs 50,000, 1 lakh 80,000. To net profit, to net profit is 1 lakh, sorry, 13 lakhs 5,000, 13 lakhs 5,000, and here it is 1 lakh 62,000. 1 lakh 62,000. We will bring down the net profit as well by net profit, to net profit carried down by net profit brought down. Cloth, it is 1 lakh 30,000, 13 lakhs 5,000, and for tailoring it is 1 lakh 62,000. There are some general expenses also that have been mentioned. General expenses which will go in the general profit and loss account because they cannot be divided. They're general expenses. So 2 lakh 7,000 to general expenses, 2 lakh 7,000. Okay. Now we come to something very important. Uh, since the interdepartmental transfers, they've said tailoring department gets all its requirements of cloth from the cloth department at the usual selling price. Okay, so the interdepartmental transfers, any transfer of goods between cloth and tailoring department is done at selling price, which that means inclusive of the element of profit. So we can't show that element of profit, and we need to eliminate that profit or that element of profit from the closing stock. Why closing stock? Because this is the stock that remains. Okay. For example, when we talk about the movement of stock, say the tailoring department has some opening stock that has come from last year, has purchased certain goods, has sold certain goods, okay, as also the interdepartmental transfers. And after getting from the opening stock the purchases, the interdepartmental transfers, after selling goods, this is the stock that remains in the tailoring department. Okay, that's a closing stock. Now this closing stock is valued at a profit. Okay, at value, there could be some element of profit because some of the stock could have come from here. Some of this closing stock which is still left could have come from here, and we need to know. So we are going to first calculate that element of profit. So calculation of stock reserve on closing stock. Working note. First working note. Calculation of stock reserve on closing stock. Now, to calculate that stock reserve, we need to know that percentage of profit. We need to know that percentage of profit. We don't know the percentage of profit. They have just said at the usual selling price. Here they've given us a percentage of profit, but for the previous year. Okay, here they've just said usual selling price. So we need to know what is that usual selling price, and to get that we have a formula. So profit, rate of gross profit is equal to gross profit divided by sales. Please remember that these sales are inclusive of interdepartmental transfers. I've not written it in every problem, but you need to know it's always including interdepartmental transfers into 100. Into 100 because we're talking about a rate, so obviously we will multiply it by 100. So it's equal to, now we need to know the gross profit, calculation of reserve, rate of gross profit of which department? Cloth department. Rate of gross profit for cloth, because cloth is the one that's sending it. Rate of gross profit of cloth. Gross profit upon sales. Okay. So that would come to gross profit of cloth. We already have found out 1 lakh 13 lakhs 50,000. So that would be 13 lakhs 50,000 divided by sales of cloth. Sales of cloth including interdepartmental transfers. So here if you see it's 36 lakhs plus 4 lakh 50,000. So it will be 40 lakhs 50,000. 40 lakhs 50,000 into 100. Okay. That's equal to, if you do that calculation, you will get is equal to 33.33%. You'll get it as 33.33%. Okay. Next, we calculate the stock reserve. Now, stock reserve will be easy to calculate. Stock reserve on the closing stock of the receiving department. Now, the receiving department is tailoring department. This is the total stock that tailoring department has. Now, the entire stock has not come from cloth. Okay, because they've had their purchases, they've had the opening stock plus the interdepartmental transfer, so we cannot assume that entire has come from stock. And they've clearly told us that in the problem, the stock in tailoring department, that's the closing stock or even the opening stock, may be assumed to consist 80% of cloth. So 80% of this amount has come from cloth, 20% other expenses, meaning 20% will come from previous stock or the purchases or something like that. So out of 1,35,000, 80% has only come from cloth department. So 1,35,000 into 80%. If we do that calculation, we get 1,35,000 into 80%. You will get 1,08,000. You can check. 1,35,000 into 80 divided by 100. You get 1,08,000. 1,08,000, and that 1,08,000 you multiply with your percentage, that's 33.33%. This 1,08,000 is the stock that has come from cloth, okay, in the total stock, and this 1,08,000 is valued at selling price. Selling price means that there's an element of profit, that's 33.33%. So we need to know what's that element of profit, and if you do that calculation, you will get 35 1,08,000 into 35 into 33.33%. You get 35,996.4. So 35,996. Okay. So we put this here to stock reserve on closing stock, or it's also called unrealized profit on closing stock, provision for unrealized profit on closing stock. You can call it anything. To stock reserve on closing stock or to provision for unrealized profit on closing stock. Similarly, in this problem, okay, it is 35,996. 35,996. Similarly, in this problem, they've also given us in 2017 and 18, that's the previous year. Our year is 31st March 19, so 18, 19. This is the previous year. 17, 18, the cloth department earned a gross profit of 30% on sales. This year, the cloth department has earned, what is the percentage of profit? 33.33%. Last year, it was 30%. So the fact that they've given us that information, the opening stock of tailoring, the opening stock of tailoring could also have a percentage of element of profit, which needs to be eliminated. Okay, and we know that again 80% of this has come from cloth. Okay, so what I'm going to do next is calculation of stock reserve. Calculation of stock reserve on opening stock. Calculation of stock reserve on opening Okay. Now, opening stock, we know the amount. Opening stock is 72,000. I don't have to do this additional step, rate of gross profit, because we already know the rate of gross profit on a rate of gross profit for close opening stock, which is 30%. Okay, I don't have to do the calculation again. Why I did the calculation here? Because we didn't know this year's rate of gross profit. Okay, last year's is already known to us. And since last year's applies to the opening stock, I'm directly going to calculate the stock reserve. Stock reserve is equal to the opening stock of tailoring is 72,000. But the entire 72,000 is not from cloth. Out of 72,000, only 80% is from cloth. Only 80% is from cloth. So if I do that calculation, I will get 57,600. And this 57,600, I'm going to multiply by 30%, which is already given to us. 30% is already given to us. Okay, so I don't have to calculate the rate. So, and 30% of 57,600 comes to 17,280. Okay, so stock reserve on closing stock and the on the opening stock we show it on the other side. So buy stock because it needs to get balanced. Okay, it needs to balance each other. So buy stock reserve on opening stock, which is 17,280. 17,280. Now this normally happens only if information like this given. In no other problem I've calculated stock reserve on opening stock. Why haven't I calculated? Because I didn't know the percentage of profit in the previous year. Or did they need uh, no problem also told me the percentage of profit of the previous year. They did not give the sales, they did not give the gross profit. Okay, so this is how this problem is done. So if I total this, I will get the total of this is 148,4280, 48,4280, 148,4280, 148,4280, and to net profit, to overall net profit would be 124, 1284, 124, 1284. Okay, so this is how this problem is